Hello traders, it's Samurai Trader here. Welcome to this training session. In today's session I'm going to be covering a number of questions from members on time-based charts. And just as I was preparing to prepare this session, I saw a trade come up on a 3-minute chart and I've executed. We've actually gone short. And I will explain this particular trade as we go along before we go back and I run through a few rules and some other ideas and tips that I have for you. Now in this particular short, I'm basically scalping the market. I've been talking a lot about scalping the market on earlier videos, and in this particular one I've kept my trading dome at the same targets. That is, on the first 5 contracts I'm targeting 4 ticks, and on the second 5 contracts I'm targeting 6 ticks. And we're actually looking at the 3-minute ES. Now we are trading the Globex market, so the main New York market is closed. A natural fact, yesterday we had a bank holiday in the USA and we had only very low volume, I should say, of about 350,000 contracts, because I will be going back and scrolling back over this chart in a moment. So what we can see, traders, I'm 2 ticks in the money at the moment. I'm after 4 ticks, and once we hit 4 ticks I will go to break even. Now time-based charts are still extremely popular. More and more traders, of course, are preferring to trade what we call activity-based charts, and we'll look at those in a moment. Now we're just bouncing around a little here, so what I want to do is I don't want to jump ahead too much, because I wanted to go through some more information on the PowerPoint before we come to the live chart. But as I mentioned, this trade come up. Now this particular trade, I actually entered it on the basis it's a T25. Now for those traders that are watching this video and have no idea what a T25 is, it's one of our 12 or 14 so trade setups. We have a small core of trading strategies or setups that we use. For my members, if we look down here, we can also see we have a very clear T2 setup. So we have both a T25 on this particular setup and a T2. So what we will do is I might just put this on hold for a moment, just so we don't you don't have to listen to me prattle on for 30 minutes, because as I mentioned, it is a very quiet time of day. Now one thing, we are heading towards the London Open. It down under in Australia, it is 4:46 p.m. in my part of the world. So we get the pre-market opens at 8 a.m. London time, which is 5 p.m. my time, and the main market opens in London at 6 p.m. my time. But we tend to get an increase in volume over the next few minutes. 15-20 minutes I should say. So you can see here we're just ticking around. Now of course we could tick up as well. Now in this particular case I've used a fixed stop of 6 ticks. And I may as well, while we're waiting for this, just explain stop. So where do you place your stops when you're trading time-based charts? Because one of the advantages of when you trade tick or volume or even Renko charts is that the candles are fairly fixed or fairly similar in size. Well, they are of course exactly the same size on Renko and volume. But you tend to find on time-based charts you can get some very large candles. So we can see here we've got a lot of activity within that 3-minute candle. Now I will go into 3-5 minutes what are the best time frames to day trade with in a moment. So you've really got 2 types of stops here. You've either got a fixed stop, that is, you say, okay, I'm not willing to risk any more than 5 ticks, 6 ticks, or whatever it may be. And of course when you have what we call full candles, that is full closing candles, that's okay. But if the candle is too long, you can still be taken out by these sort of reversal candles as well. So you've got a fixed tick stop you can use, or you've got a stop, you'll put a stop one or two ticks below your closest swing high or swing low. So we've got a little swing low here, we've got a little one here, we've got one here, we've got one here. So you may choose to tuck your stop under these, but what is very important is your risk reward, of course. So we're just ticking around, and what I'll do is just put this on hold for a moment. No, we just keep ticking around. This is fairly typical, I should say, this time of day. There's plenty of buyers in the market, so we still could be here for a little while longer. There's a little bit of support around this area. So we've now ticked down, we've been filled, so we're now up on half of my contracts 5. We've grossed there $250 less commissions on 5 contracts. So I've now gone down to break even. Now what I'm really hoping here is our momentum continues. So with this particular strategy I'm illustrating, I'm targeting 4 ticks on my first lot of contracts and 6 ticks on my second. Now you could probably very safely trail using your 8 EMA. So this particularly is from a number of clients that have been asking about time-based charts, is where do you trail? Well, you can use, of course, your 8 EMA here, or you can tuck and trail simply 1 or 2 ticks below the lows until finally you get stopped out, which would happen up here. So I'm going to go to the PowerPoint now, and I'll just let this tick away, and hopefully we can see we've bounded up, back up a couple of ticks. Hopefully we then continue in a moment. So traders, let's now go through our PowerPoint, and you've probably just heard order fill. We've just gone up and been taking out at +4 ticks. Of course, when scalping, as explained in earlier videos, one of the advantages of having 2 targets, or at least a small target, it's always nice to be able to bank a few dollars, and even if it comes back up and takes you out, you can always re-enter the trade based upon other setups confirming the re-entry. So I'm going to be doing a lot more on scalping over the next week or so, some more videos and some live trading, because I've just had a huge response and interest over a period of time from traders that want to scalp, want to get in fairly quickly and out. Now some traders will still argue that I am a scalper, and that's true to a degree, but there's scalping and then there's very short-term scalping that is in and out many times in a day. So we'll cover more of that on another video. So in this particular session I'm going to be covering time actually it should be time-based charts. Let me just take that out. I just noticed a typo here on, or focus, oh no, that's correct, sorry traders, I'm multitasking here. I'll focus on time-based charts versus activity-based charts. Now as always, please have a pen and spiral notebook handy, because hopefully I do give you some ideas that you can use immediately. As always, if you haven't read one of my risk disclaimers on my videos, please do. We will be going back to the charts in a moment, so please go to full screen down to the bottom there. So let's have a look at here. So many day traders are moving from time-based charts to what I call activity-based charts. Activity-based charts, of course, are tick, volume, range, and Renko, and they're very much based upon what's happening with volume and movement in the market. However, time-based charts still have a huge following. I mean, some of the advantages of time-based charts are, for an example, you can put a timer on your chart, as I've got on this 3-minute chart, which we go back to in a moment, and you know exactly when the candle is going to close. Now I know you can argue you do on Renko as well, but the thing with a time-based chart, of course, you can have a lot more movement in the market. Either way, there are still traders that have traded for many years using time-based charts, and they want to stay with those charts. So if you look at day trading, one of the questions I had from one of my members is, what are the best time frames to day trade with? Well, of course, you can scalp with 1 minute, 3 minute, 5-minute, you're getting almost into swing trading when you jump up to the 10-minute. And in some ways the 1-minute can be a little fast, but it suits true scalpers. So I like the 3 and 5-minute personally. I think there's a happy medium with those two charts, so we'll have a look at more of that in a moment. Now what is really important here is, in a moment I'm going to show you and go through a couple of different setups and show you the list of trend following strategies that we have. Now as I say, I'm very patient as a day trader. I'm very disciplined, I'm very focused. Now discipline, sometimes I must admit I drop that. For an example, one of the rules is to have a quiet, not be disturbed, and to really focus, pull down the blinds, turn off the TV when you are scalping or even day trading, full stop. But I'm very focused 99% of the time, and I'm a rules-based trader. And the reason I bring that up is this. What I've got on the chart here, on the PowerPoint slide here, is quite a number of different setups. So first of all, I want to start with the holy grail of trading. Well, I think in many ways, besides the control of one's emotions, it's very much trend trading only. Now for our members, it really comes down to your T1, your T2, your T18, remember, is a trend following strategy. Your T20-1, I've been talking a lot about that. Your T20 signifies a change in trend. Once it happens and you have your first pullback, it's basically confirming that T20 has come through, and that then becomes a trend trade, because you've got a new trend at that stage. Your T25, which is fantastic for scalping, and your 34B, your 89, and to a lesser extent your 200B. Now your two best here I wanted to really focus on are really your T1 and your 34B, and these are where really a lot of questions come through on these. They're very easy to learn, they're very rules based, and all of these, by the way, are 95% rules based, as you know. The things where it does vary is, for an example, do I have a trend? Because one thing that we all want to stay out of is chop, congestion. The other things is, are we trading around a news announcement? So these are sort of things we want to stay well away from. And as I always say, traders, focus on a maximum of 2 strategies until you achieve mastery. If you focus just on the as an example, the T1 and the T2, you'd never need to trade. You could really just trade those the rest of your life without any other setup. So what is very important is that you focus. Now all of these are covered extensively, of course, in the Day Traders Fast Track program, where I cover 14, I think it's now gone up to 14 different strategies. We have a core amount of strategies, and for $197 you get all the rules, you get over 20 hours of video, live trading, etc. It's the most comprehensive program in the market today. However, because it's mainly members watching this, I don't want to drag on the course. You already own the program. So let's now go back to the chart. So what we can see here, traders, we can see here we've come down, we've found some support, and we've bounced up. So what we would normally be looking for is here is a re-entry. However, I've banked some dollars. I'm let's see how much in front. 50, so I'm about $210 in front on this little trade after commissions. So just for a nice little scalp, that's really nice. So let's now just have a look at a couple of things here on being a time-based chart. So what I want to do is just go where I can, let's say I want to go to a workspace, is just go right across to here. Sorry about this, just organize myself here. So what I've got on the left here is a 3-minute chart we're looking at, and we have on the right a 233 share bar. Now the 233 I love on the Globex market. As you're about to see, we get a lot of activity here. Actually, no, we're not going to talk too much about that. Remember, I'm meant to be focusing on time-based charts. But what I want to point out is this activity over here on the right, on the left. This is really over the last this is basically 2 hours of activity. Here to here, you've got what have we got there? Sorry, traders, I'm just trying to compare. I've just got a problem with this appearing. Okay, well here you can see here you get a lot more activity, but if we look at this, there we go, now it's working. So if we look at this here, let me just move this along. My charts are not scrolling for some reason. I just wanted to show you here. Okay, so this little activity here is this activity here. So you can see on a 3-minute chart it looks very different compared to the share bar chart that we've got here as well. So looking at this 3-minute, and let me just get this here. This always happens, isn't it? When you go live, your charts play up on you. Okay, so we can see here we've got some good activity. This is yesterday's action. We had a bank holiday, so the volume was all over the place, but we can see here on the 3-minute chart you still get some great trades. You've got here a nice typical 89 bounce, you've got a 34 bounce, you've got an 89 bounce, you've got a 200 bounce. Now traders, with the 89, of course, one of the recent things I've been really talking a lot about is to target your previous swing high in this particular case, which is up here. Here you've got your 89, your target would be up here, and it went up and met that. Your 200 you'd be targeting up here, so it works really nice also on your minute-based charts. But you can see here overall we've got our 89 bounce, we've got our 34, we've got our 89. Okay, sorry, I've just jumped back. I had to do this. I just saw the market drop. So just on this trade, this is one of the risks of pulling the stop down too tight too early. We can see we come down, we were taken out here at 4 ticks, exited the second 5 contracts at break even, and then we had a T25 set up there, and away it goes, also a T2. This is what I wanted to mention about time-based charts. So we can see we've got quite a large candle that's set up, and as I mentioned, we're heading towards the London Open. London just opened 3 minutes ago, so it's now 3 minutes past 8 a.m., 8:03 a.m. The pre-market is open and we've seen a drop in the market. Now if we then look over to our other charts over here, and I know it's right on the edge here, we had some other entries. We had our initial entry was on this candle right here. We then got stopped out, but then we had another entry either here or here, which would have put us back in. The problem at times with time-based charts is, technically speaking, we have a T25, it's basically a T2. We've got a number of different things on this time-based chart, but see the size of this candle in comparison to the others. So this can be the challenge when you get really large candles. Quite often you'll see the market rebound, bounce back up again. So you might want to wait for a secondary entry. You also have another issue here. We've come down, and what have we got here? We've got the 200, and what normally happens at the 200, we normally have a bounce. So it'd be interesting to see what happened. Now I also just loaded some more data on, and we can see here that the 3-minute looks almost identical in many ways, except for larger candles at times, to our range or our tick charts. Once again, T2, 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 34 bounce, 34 bounce. You've got plenty of T25s. So you've got a whole range of our different setups. So that is the 3-minute. What I'm going to do now is jump over to and just quickly show you the 5. I don't want to make this a War and Peace video. Now just remember that the 5-minute is going to give you less trades, but that's going to suit those that are more, well, prefer not to be scalping so quickly. So what we're looking at now, traders, is the ES 5-minute. We've got a 34 bounce, you've got a 200, you've got a 200, you're stopped on that one for a re-entry. 34.89 bounce, basically an 89 bounce, T25. The point I was bringing up earlier though about these larger candles, they're not, I just don't think they're anywhere near as smooth. Now over here we can see my little clock is getting back in touch with the market. So for these candles closing, to have a timer on your chart just makes it much easier for your entry. So it allows you to prepare, and of course on these you can have an alarm set as well. So basically it's going to go off when the candle actually closes and is ready for a re-entry. So you can see here once again 34 bounce, 34 bounce, 34 bounce, 89 bounce. So all of our trend following strategies work beautifully. Now for the newer traders, a lot of these I haven't even, except for this one, I haven't even really referred to any of the indicators on the bottom half of the screen. You can keep your if you're trend trading particularly, you can really keep your screens really clean. For those that love to trade the T2, which is a fantastic setup, you might just well, you would just have this down on the bottom, which is our short-term stochastic combined with the long-term. But you can see here there's just plenty of great quality trades, and here you're looking at the market open going back a few days ago. This is 8:30 in the morning, and away we go. So this is basically a whole day's action in this time period. Now that's where I love range or tick or other time frames, because it gives me a lot more activity. As mentioned earlier, you can drop your time frame if you want more trading opportunities. Simply drop the time frame. So traders, that was a very quick video recap specifically for the traders that have been talking to me about time-based charts, and specifically on the 34Bs and the T1s. You can see they fire off all over the place. You get them throughout the day. Traders, any questions, please feel free to drop me an email. All of this of course is covered comprehensively in the Day Traders Fast Track program. So please go to my website and download some information on the program, or drop me an email and I'll email it to you. Thank you.